welcome in. Thank you all for joining. Happy Saturday. Thank you to the mods in the chat and everybody for being here. And yeah, that's always cool when we got audio. Still check. So let's jump in with a lot to cover. It's been a very, very wicked week for many. Everybody's freaking out. We're going to talk about risk and what's actually happening behind the scenes. We'll touch on some macro stuff, some advice, some storms, some crashes, not only Bitcoin crashes, but other ones too. So let's jump in. And we also talk about what is going to happen next week as well. So thanks again for coming. So far, let me see. This week, global crypto market is a little higher than it was yesterday. It's about, I think, what yesterday was just 1.01 trillion, 1.02 trillion. Now it's 1.06 trillion. Volume is half of what it was yesterday. Everything's calming down. Bitcoin just pumped $80. It's $26,131. Bitcoin dominance 47.8%. Ethereum has been outperforming Bitcoin a lot this month, and despite everything that's happened, it's still strong. ETH dominance is 19.1%, and fear and greed is 39. It means everybody's scared and they want to run away and hide. So let's just look at data. That's all we do here. And disclaimer: this is just edutainment. And another cool thing is, literally, it's a very, very important time to be on top of things. And hit the subscribe button if you want some brain boosting gems. And I guarantee you, every single video you watch of mine, you will learn not one thing new, but many things new you've never heard of before. That is my guarantee. And the story, well, I'm going to talk about what's happening with Bitcoin, what the whales are doing. Coin operator, appreciate you. Risks, alts, Tesla, GM, Fed, CBDCs, deficits, a lot to go through. And it's all related. Everything we talk about is connected. So first, let's talk about Bitcoin. A little bit of Glassnode data here. Nearly 30% of Bitcoin has not moved in over 5 years. 30%. That's an all-time high, ladies and gentlemen. So what's happening to these bags? Well, if they haven't moved in the last 5 years, odds are they're not going to move, and that's just the reality. Let's talk about crunch time. I've been talking about supply crunch now for years. One of the obsessions I had with Bitcoin back in early 2017 was its supply. And I thought one day in the 2020s or before 2030, we'd have that supply crunch. But again, to reemphasize this, I've mentioned this before in Octa a few times, but it bears repeating. The 2024 halving will be the first time that the supply of Bitcoin available for trade has decreased since all other previous halvings. Put another way, the 2024 halving will mark the beginning of a new era of scarcity for Bitcoin. And that is before even talking about BlackRock coming in with their spot ETFs and everything else. So the reward will be halved from 6.25 to 3.125. And as a result, things are going to get real scarce. That is guaranteed. And the price will go up. So what everybody's freaking out right now, though, is the risk of Bitcoin. And these charts pop off. If you go to this risk signal chart a week ago, it's all nothing. Everything is fine. But today, it's at 100. And there are apparently, this is per Swiss block, there are two scenarios in play. One, the risk signal stabilizes and reverses abruptly. And the spotlight is key here is that holding that 24,800 to 25,000 range, you know, I keep dropping limit orders down there, and then things bounce up. So it looks like people shop just above the 25K range, which is great. I have been talking about, like 2 months ago, the 25021 was a perfect limit order. And we didn't, well, it depends on the exchange. Some people apparently got fills at 25K flat and just under 25K on certain exchanges. But again, the question is, will we revisit previous lows in the structure? Will it be a swift dip like March or a gradual decline? And that's what we have to look for. But there's more, a lot of more kind of scary charts. So sometimes a lot of people look for signal in the past, and I do too over history, but Bitcoin is still very, very new, and sometimes things are different. But the 200-day moving average is a critical level. We are a little bit below that right now. And it's important that we get above it as quickly as possible. If we stay below it, it could be a bad sign. Now, have we dipped below it before? Yes. all the times we dip below the 200-day moving average. You can see that big dip back in late 2018, the C19 dip in March 2020, and of course the dip we had in the bear. But here we are now. The question is, will it dip again? And I think there's a lot of people talk about, oh, well, you know, coming up to the halving, there's a dip because it did it last time around. But last time around was driven by C19. I'm not going to mention the C word, but that's what happened in March. And that is not reflective of how Bitcoin behaves. Mr. Shake, thank you so much. Now let's talk about another key level as well. This is from the Rational Root, puts out some amazing work, but he speaks of what he calls the mezzanine level. And in the current phase of the cycle, there is a high chance of remaining above the mezzanine level, which is magically at 21,750. So he came within $3,000 of that mezzanine level. But that, ladies and gentlemen, is the floor. And that, ladies and gentlemen, would not have been breached last time around if it wasn't for the C19 Black Swan event that happened. We would have remained above the mezzanine level. So everybody, for those of you who listen to Twitter and everything else, and they're saying we're going to 11,000, we're going to 12,000, we're going way back below 15,000. Remember, that would be extremely unlikely based on history. But Black Swan hits, everything's possible. Now, let's look at what the big boys and girls are doing with their bags during this downturn. This is what I look at, because I don't want to follow what Twitter does, but I want to look at what the big money's doing. So this is a new wallet number 3. And it stacked 118,000 Bitcoin in 97 days. Did they sell any over the last week? Nope. So who is grabbing all of this Bitcoin? And you know, I always talk about, look what the big money, look what the big smart money does all the time. Look where the big options trades are positioning themselves. And I always say that, you know, sometimes it can be clever to wait last minute to get that plane on the seat or the train. But I'd rather pay a little bit extra and make sure I have that seat than wait last minute, try get a heavily discounted seat that may never be available. So, is it worth getting on the train at 25K or waiting for that magical 15,000 or 11,000? That's the question. We know the price is going to go up and people are stacking hard. Now this big whale, 118,000, that's a big bag accumulated all of a sudden. And that is not Sailor. That is somebody new, and we all know it could begin with B, but we're not sure. Somebody is stacking for sure. In addition, not just the 100K plus whales. This is the 10K to 100K whales added 60,000 Bitcoin in the last 30 days. Big spike this week. So who is selling it? So the miners are holding on to their Bitcoin right now, but the people that sold are the 10 to 100 Bitcoin holders and the 100 to 1,000 Bitcoin holders. They are releasing because they want to buy in cheaper. But the big guys, the 10K plus, are buying it all. So that's kind of the lay of the land. I think it's important to look at too. So let's look at, well, we covered that. That's the chart. Whoops. Let's talk about altcoins for a second. Here, I always go through kind of what happened last week across the L1 and L2 winners to show you exactly what's happening in the cryptoverse. And apart from base really taking off, I'll talk more about that next week. But total value locked growth over the last week goes to Cosmos Atom. Smart stablecoin volume goes to Solana. Weekly commits goes to Solana's development measure. Weekly developer growth goes to Phantom. And active address growth, daily active users, goes to Cosmos again. So Cosmos wins 2 and Solana wins 2. So it's good to know exactly where the growth is, whether it's on the development side or stablecoins or TVL or whatever else. Things are changing rapidly. And that's a bit of an eye chart, but it's always nice to reflect on. Speaking of where all the action is coming from, well, it has been a wild roller coaster week with markets ups and downs, and many people, including myself, couldn't activate my Coinbase when I needed to at the exact moment I needed to, and it's the first time I've ever been caught out like that. So I had to find an alternative. And this action, this roller coaster, this volatility is keeping decentralized exchanges and perp trading engines revving across all platforms. And while centralized folks are getting the regulatory side eye, bet on decentralized exchanges catching up and snatching more of the market as they spruce up the user experience and trading setups. Still, I don't have the kind of liquidity I need in some of these places, and the spreads are too high, but they're getting a lot better. And August 17th, decentralized perpetual trading volume skyrocketed versus the day prior. dYdX logged $1.6 billion in trading volume versus $620 million. That's $1 billion more trading volume in a day. GMX saw a significant increase in trading volume as well. 380 million of perps across V1 and V2. And again, it's crazy. So dYdX, Synthetics, GMX, all on fire. Huge growth and interesting to watch. The future will be decentralized. No ifs, ands, or buts. Nobody wants to rely on centralized stuff anymore, especially with some of the crazy things that have happened over the past couple of years. Let's look at fees, daily fees across all the top chains, all the layer 1s, all the layer 2s. And you'll see here, this is kind of interesting. Obviously, Ethereum, just nearly 5.5 million of daily active fees. Bitcoin, $578,000. Binance, $356,000. Arbitrum won $116,000 in daily fees. And a lot of that is triggered by those dexes we just looked at right now as well. Arbitrum is the winner from all of this activity. Solana, 45,000. Polygon, 26,000. I haven't seen such a big delta between Polygon and Solana actually in quite some time. Cardano, 5,000. Phantom, 2,900. Doge. Doge is in here. Oh my God. I don't even know how it snuck in. Ripple, 1,200. Monero, $960. Near 829. And Polkadot, $795. Unless something radically changes, if you're not making substantial fees, the chain will just wither away. That's just my opinion, and I do plan on making a detailed analysis of that as well as we go forward. If you're interested in chains and fees, and if they're going to make it, let me know, and I'll do that, and I'll make myself even more unpopular in the cryptoverse. So, speaking of making myself unpopular, this is the next 7 days of dumpage. Avalanche will be raining down $110 million worth of coin. Then we have Injective Protocol, $23 million. Uniswap, about 16 million. And Lido, about 14 million. So be careful. Literally, when these things get unlocked, price goes down. It's just the nature of the beast. So, especially that AVAX dump, in case you missed it, $110.71 million. Whoa. All in the next 7 days. Now, let's talk about Binance for a second. Binance headquarters has been actively looking to protect their Binance token. A critical level, they say, is $215. That is the level that they need to retain. And why is that? Well, Binance has been selling their reserves and buying its own BNB token to counter widespread selling. And the defensive strategy is aimed at preventing a margin call on a huge collateralized Binance coin loan. Now, BNB is the native token of Binance, similar to the company's stock. Think of it, and CZ denies debt, but it's likely that a company of Binance size has used leverage, possibly against its own stock, i.e. its token. And rumor also has it that maybe, allegedly, he's selling Bitcoin to keep Binance afloat. And of course, playing the games with stable coins and other stuff with different partners. Lots of shell games happening here. Be careful out there. Speaking of which as well, the hits keep coming for Binance. London's checkout.com, it's good to see there's a big .com out of the UK, ends ties with Binance due to regulatory concerns and compliance issues, citing letters this month. And this is a big hit as well to Binance. Looks like a lot of partners are just fleeing right now. They do not want to be associated. And this has been going on all year. So not good for Binance. Will they make it? Probably yes, of course. But there'll be some rainy weather in the meantime. Speaking of global liquidity and raining weather, global liquidity is tightening into the halving so far. I do touch on this every Saturday. And Bitcoin is a mirror of global liquidity. That's why we care about it. Everything is related, as I said at the beginning, particularly the US dollar liquidity. And as the world's central banks tighten their money supply in unison and US investors de-risk, barring an imminent spot ETF approval, there is no upward catalyst for Bitcoin right now. And as we've been talking about as well, this bucket of risk unequivocally skews potentially to the downside. But the buying pressure is coming from the whales. And this is the kind of fine balance that we try to figure out here. If the whales are stacking so hard, why aren't they waiting for a lower price if many people are convinced there's a lower price? But anyway, liquidity does hurt. The fact that it's going down is bad. I do believe China will flick on their money printers real soon, so stay tuned for that. Now, moving to cash also. Speaking of cash, money makes the world go round. Money markets are on fire, adding 40 billion last week. You can see now the total amount in money markets is just $5.6 trillion. And that is a quarter of the entire US Treasury market is in money market funds right now. So this means people are de-risking, moving to cash. They've been doing this for quite a while. It was obvious to see a couple of months ago. So cash is a good thing to have, especially when deals started rising in the markets. And we're going into August, always sucks. September is normally worse. So buckle in, ladies and gentlemen. Keep that cash on hand for those buying opportunities. In addition, speaking of Tesla, guess who just joined the Tesla charging standard? Honda and Acura. They're all one big company. I think Acura is the luxury brand for Honda, just like Infinity is for Nissan, and I forget the other one, Lexus for Toyota. But literally all the dominoes are dropping very, very quickly. And Tesla plugs will be the standard for pretty much every EV in the world. And then it's only just going to begin. Tesla going to build up their electric gas stations all over the place, and everybody will be charging off that standard. So nobody else can catch up. Speaking of Tesla competitors as well, General Motors have a thing called Cruise, and Cruise have been breaking down, blocking traffic, etc. They just got permitted last week to run kind of 24/7, 7 days a week in San Francisco. But this just happened. A GM Cruise crashed into a San Francisco Firetruck. Can't make this up. Nobody is hurt, thank goodness. But these things are shit. So, excuse my French, whoops. Let that out. Now, next week, all eyes will be on Jackson Hole. Jerome Powell is speaking there. And people parse through exactly what he says. And his words, however, may carry a lot less weight because people know they're at the end of their journey. And the market attention is shifting towards treasury yields, corporate credit spreads, equities rather than the Fed rhetoric. People just get jaded listening to the same guy over and over and over again. 2%, 2%, 2%. People are just bored with it. And Powell's anticipated remarks about inflation may not match the current market's desire for rate cuts, leading to risk allocations being reduced due to lack of signals from the Fed. And the US deficit has a lot of problems. But the Fed has begun to turn at last. You can see there are people, Fed officials, are turning cautious about raising rates too high, and people are beginning to see cracks everywhere. So, speaking of one of the biggest cracks, this is kind of stunning. The US deficit in July 2023 was $221 billion. Between us friends here, let's call that $250 billion. If you annualize that deficit, it's $2.62 trillion. That is stunning, okay? People don't understand that is way more than half of all tax receipts within the country. And it's about to explode a lot higher because half of all the debt, which is like 33 trillion, is about to roll from like 2% rates to 4.5%, 5% rates. And nobody's buying the treasuries. This is a problem. Where do we go from here? QE to infinity. That's the only way out. That's why we do Bitcoin, ladies and gentlemen. But there's something weird happening too. Despite all these selling pressure and stuff, GDP forecasts are exploding upwards. Now 5.6% as of 16th of August from FedNow. That is stunning. So the economy is growing. Maybe it's a function of the fact that the other economies aren't doing so well, like parts of Europe, China, etc. as we go forward. Speaking of Feds and treasuries and everything else, this is just a cool little chart here from the state of crypto. And from just 10% of central banks in 2020, 3 years later, now 130 central banks are exploring their CBDCs. And why do we care? People say, oh, CBDCs is fine. It's just a better better thing. But no, the problem I have, right? We're in crypto for a reason. And I tweeted this yesterday, or about 16 hours ago. It already has 1,400 votes, but 12% of people still say, yes, I would. I love CBDCs. And I believe, no, a central bank digital currency, an Orwellian spy coin, is against the crypto ethos. Cryptocurrencies and central bank digital currencies are both digital. Yes, they have that in common, but there's a lot of differences. Crypto should be fully decentralized, meaning they're not controlled by any central authority. And CBDCs, on the other hand, are issued and controlled by central banks. And this difference in centralization or decentralization is one of the main reasons why cryptocurrencies go against the ethos of central bank digital currencies. And central banks believe they need to maintain control over not only the money supply, but also the people to ensure financial stability. And they also believe they need to be able to break and track and regulate all transactions. And they say, oh yeah, it's for many, many reasons, but anyway, enough of that. Crypto, on the other hand, is designed to be decentralized and be more attractive to people who want to avoid government control and censorship. And I hope I just don't get deplatformed for saying that. Anywho, that's where we're going in central bank digital currencies. And in other news related to that too, US and India are afraid of crypto. The G20 nations, with support from FSB and IMF under India's presidency, are moving towards a aligned set of crypto regulations. Now, do you think what they come up with is going to be good? I certainly do not. In addition, this was kind of a cool piece of news because I do believe a lot of the stuff that comes out of cable TV is all garbage. So if you want to save money, cut the cord. If you want to save your brain, cut the cord. Freedom from mainstream BS narratives, etc. This is interesting. Only 29.6% of Americans now have cable. It's gone. It's dead. Okay, this is how disruption happens, and happens really fast. So if you're a cable company, you better find different ways of making money, like providing customers with internet so they can stream their own content of their choice. So anyway, it's we're going to see things like cable news networks and everything else suffer pretty hardly. And final bit of news for anybody in the west coast of Mexico or the US, there is I think it's an 1 in 80 year storm is coming. This is a huge hurricane. It's called Hurricane Hilary, not related to Hillary Clinton, by the way, not that I know of. But the US could literally, this is crazy, receive as much rain as it normally does in a year in just 1 or 2 days. That is insane. Winds could be as high as 125 miles an hour. And right now it's just located south of the Baja California tip, and it's going to cause catastrophic flooding over Baja California, Southern California, all those places. So be safe out there. If you are in a floodplain, prepare right now. But this is a serious thing coming, and I'm not the mainstream media trying to alarm people, but just be careful out there. All right. So with that, everybody, thank you for spending part of your Saturday with me. And I will see you all tomorrow in the live Q&A, where we take all the top questions from Patreon for the week. And there's some really cool ones too as well. So thank you all for coming. Have a tequila. Get ready for the storm. And thanks to the mods in chat. Bye-bye.